Hey everybody, it's Vincent La Fiura coming at you from www.mytorontorealty.com and of course Remax West. Today I have a very special guest with me. She's one of the best mortgage reps I've ever been able to work with, and she's from Verico Lending Logic.
Yep.
Michelle Brienza. She's taken the time to do this, and I'm just going to ask her a few questions. First off, hi Michelle. Thanks so much for doing this.
Always a pleasure.
Tell us about Zero Down. Does it still exist? Is it still possible?
So Zero Down has kind of changed a little bit. The technical 0% down doesn't exist anymore. But what lenders are now starting to do is a 5% cashback.
Oh, wow.
0% down used to be for those kind of people who had good jobs, good credit, good income, but had no money to be able to put as a down payment.
Okay.
And that was it. Like, all you needed was for money for land transfer taxes, legal fees, that sort of stuff.
But this cashback is really intriguing. Really quickly, can you tell me what these viewers, I'm sure that they're going to find that intriguing, what they'll need to qualify for the cashback?
Well, the cashback, the same thing. So what happens is most of those people still don't have any down payment. They'll need money for your closing costs, land transfer taxes, all that sort of stuff. But what happens is with the cashback, the lender is giving you that 5% cashback.
Oh, wow. Okay.
But the difference is that with a cashback, the interest rate is at posted rates.
Oh, okay. So it's not the discounted rate.
Exactly. With the 0% down, as long as you qualified, then you could get those best rates. With the cashback, it's posted rates. So it's really a situation of if you can still afford those payments. So qualifying is a little bit different with the cashback versus the 0 down.
And does the cashback come on closing?
It goes straight to the lawyer on the day of the closing, because we make the assumption that that money has got to be used for the down payment. And if it doesn't, then the lawyer will just give you that money at closing.
Which makes sense.
Yeah.
And what about the amortization period? I understand that 40-year amortization periods are no longer...
Well, at any of the banks, they no longer exist. We used to have, up until about 2009, we had a 40-year amortization. In 2010, they scaled it, no, in 2008, they scaled it back to 35. And in 2009, they scaled it back to a 30-year amortization.
Oh, wow.
However, I still have one lender that offers a 40-year amortization on conventional mortgages. So while the banks don't offer that, I still have access to a 40-year amortization, believe it or not.
And is it good for those investors out there?
Absolutely.
See, that you need to call. If you're an investor out there and you really want to spread those payments out, Michelle Brienza is the one to call.
Yeah, it definitely helps out with cash flow, that's for sure.
Oh, absolutely.
Yeah.
Tell us about these new mortgage regulations and how they may affect the first-time buyer or the self-employed person out there.
All right.
Because that's a tricky one.
How much time do you have? So, as far as the new regulations, the government, since everything that's been going on in 2008, there's been a lot of changes with the regulations, and the government's been trying to implement them slowly. And I think for now we're going to be done. But 3 of the most important implications that have been done lately is the one, you can't refinance more than 85% of the value of your property, whereas before you could have up to 95% of the value. Secondly, with rental properties, you have to now put minimum 20% as a down payment.
Okay.
You used to be able to put 5 or 10% down, depending on the amount of units that there were. And the third one is the amortization that's changed from a 35-year am down to a 30-year amortization. One of the other things that's not, well, and another rule that was introduced is how people qualify for mortgages.
Okay.
So you used to be able to qualify based on the 3-year posted rate or the 5-year discounted rate. Now, if you want a variable rate mortgage, you have to qualify based on the Bank of Canada benchmark rate, which is currently today, as of December 1st, 5.29%.
Oh, wow.
Mm-hmm.
So that's a big difference.
Exactly.
In the
So if you want a 5-year fixed, you can qualify at the 5-year discounted. But if you want a 4-year fixed or lower, you also have to qualify based on the Bank of Canada benchmark rate. And a lot of people don't know these rules, and it really does implicate or affect what kind of financing you're going to get.
Absolutely. And you heard it here first. Another first from www.mytorontorealty.com. If you want an expert, Michelle Brienza is the one to call. You can reach her at 416-769-1616 or click on the link in the description and it'll take you right to Michelle's website. Thanks so much. Again, Michelle, thank you so much for doing
welcome.
this.
Anytime.
I know that I appreciate it and I know that the viewers will as well.
Excellent. Good.
Have a great day.
Value.
And we'll see you soon, guys. Take care. Bye-bye.